Hi guys, welcome to Oliveboard. Today we have a new video for you and it's about liberalization, privatization and globalization. We'll be looking briefly into the economic reforms that took place in 1991 and the impact that it had on India. So let's jump straight into the video. First, let's have a small background about today's topic. The Indian economy had undergone significant policy changes in the beginning of 1990s. This new model of economic reforms is commonly known as the LPG model or Liberalization, Privatization and Globalization model. India had gone into a state of economic shock after the Soviet Union collapsed and the oil prices spiked due to the Gulf War. This caused India to almost fall into bankruptcy. India had to ask for a $1.8 billion loan to the IMF or the International Monetary Fund, and they provided this loan based on the condition that India went through systematic economic reorganizations. The primary objective of this model was to make the economy of India the fastest developing economy in the globe with capabilities that help it match up with the biggest economies in the world. The chain of reforms took place with regards to business, manufacturing and financial services industry. These economic reforms influenced the overall economic growth of the country significantly. So what is LPG? LPG is liberalization, privatization and globalization. Liberalization is defined as making economics free to enter in the market or reduction of government regulations. Liberalization in India started from July 24, 1991. Privatization is the shift of economic control from public to private hands. It involves participation of private entities in businesses and services. Globalization refers to the consolidation of the economy among various economies of the world, a process of integrating regional economies, societies and cultures through a global network of communication, transport and trade. The then Prime Minister of India, P.V. Narasimha Rao, and the Finance Minister Manmohan Singh made some recommendations for economic reforms. The reforms proposed by the government were modifying security regulations and setting up the SEBI Act of 1992, which would give legitimate power to the Securities and Exchange Board of India to record and control all the mediators in the capital market. Getting rid of Controller of Capital Matters in 1992 that determined the rates and number of stocks that companies were supposed to issue in the market. Launching of National Stock Exchange in 1994 in the form of computerized share buying and selling system, which will help restructure other stock exchanges in the country as well. Due to this in 1996, the NSE surfaced as the biggest stock exchange in India. In 1992, equity markets of the country were to be made available through overseas corporate investors. The companies were allowed to raise funds from overseas markets through issuance of GDRs or Global Depository Receipts. The promotion of FDI, foreign direct investment, by means of raising the highest cap on the contribution of international capital in business ventures or partnerships from 40% to 51%. In high priority industries, 100% international equity was allowed. Cutting down duties from an average of 85% to 25%, which allowed the rupee to turn into an exchangeable currency, and reorganization of methods for sanction of FDI in 35 sectors. The boundaries for international investment and involvement were to be removed. Now let's see how these reforms impacted India. The overall amount of overseas investment rose to $5.3 billion in 1995-1996 from a meager $132 million in 1991-1992. Narasimha Rao started industrial guideline changes with production zones. We got rid of license Raj and control on industries was moderated. Steps were taken to regulate inflation and loss of deregulation on businesses and services saw the beginning of privatization. Tax reforms were made and there were a lot of overseas trade opportunities as well. The fruits of LPG reached its peak in 2007 as India recorded its highest GDP growth rate of 9%. So that was our take on LPG and I hope you guys found this really informative. Please like this video and share it with your friends. Comment below and get your thoughts about LPG heard as well. Make sure you subscribe to the Oliveboard YouTube channel for more interesting videos like this. Thanks for watching, and I'll see you in the next one.